And I want to, okay, I'm Mary Preenan. I'm the Director of Communications for the Hudson Gateway Association of Realtors, and I want to welcome everyone to our Breakfast with Benefits. And today we have Sheetal Sawhney as our guest. She's from Cross Country Mortgage, and she's going to talk to us about non-QM loan solutions for today's borrowers. So thank you, Sheetal, for coming on and for giving us all this great information.
No, thank you. My pleasure. I'm excited to do this. So guys, you don't know me, so I'll just tell you what I do and a little bit about me. I've been a lender for the last 25 years. And in the past 6 years, I opened my own branch. I have 2 branches right now. And my pride and joy is my team. We all work very hard. It's such an intense business. Real estate is intense, mortgage is intense, and together we do a lot. It's crazy how much we work to get one file to closing. I love what I do. It is my passion. My biggest niche is the more difficult loans. I don't want to say I attract it, but I am known in the industry for sometimes closing loans that were denied by other banks. We have no overlays, and that's the reason for it. And I'm not a magician. I don't have any magic programs. It's just that I like to structure deals. I have enough knowledge that I know what to take out, what to put in. And we have aggressive products, so it's very helpful. I do a lot of low down payment loans. That is my niche. We are also a bilingual office. My entire staff speaks Spanish. Just letting you know. So, realtors always need to know multiple lenders. You always need to match personality types with the lender to make a good mix. So obviously you need to have many, many lenders in your database, right? So I'm licensed in New York, New Jersey, Pennsylvania, Connecticut, Florida, and Georgia. And it's incredible in the pandemic how the business has increased, not just in New York, but there's a shift. A lot of people are moving. So, for bigger space. So a lot happened, right? So people working from home, so they need more space. So they decided to move out if they can't afford New York. That happens too. So that being said, today's topic, okay, is on non-QM. So guys, QM stands for qualified mortgage. What is a qualified mortgage? It's our regular loan, agency loans, 30-year fixed, Fannie Mae, Freddie Mac. These are all qualified mortgages where we're checking income, assets, and credit and getting our borrowers their mortgage. Non-QM is outside the box. It's not that. They don't have the income. They don't report the income. There is something lacking that an agency will not give them a mortgage. And this is bucket number 2, where we have a lot of brokers that have designed mortgages so that they can fund families who do not get qualified normally, okay, with full doc. Make sense?
Yes.
Okay. At any time, I'm not looking so much at the chat because I want to focus on you guys. So you can, I'll pause and then you can ask me questions. And I just want everyone to be with me, okay? So I consider lending in 3 buckets, just so you have a better understanding. Bucket number 1 is agency loans. What does that mean? Government loans. The government has FHA. It's a federal loan, Federal Housing Administration loan, right? 3.5 down, we all know that. Now, FHA is a government insured loan. The government insures for these loans so that they can promote homeownership. Then Fannie Mae, Freddie Mac, Ginnie Mae, these are all agency loans funded by the government. VA loans, VA is guaranteed by the government. So all these loans fall in the first bucket. These are the best deals. You can get a lower down payment, the best rates, nothing beats that. However, you need to qualify. There are guidelines which are stricter. They all want full doc. You have to qualify with the income you report to the IRS, right? We do our debt to income ratios, we lenders, and then we tell you the amount they qualify for. So that's bucket number 1, agency loans. Then we have bucket number 2, which is the topic for today. We're going to talk about bank statement programs, no tax return programs, DSCR programs, ITIN numbers. We're going to go deep diving into all of these, okay? Investors. Then you have a third bucket, and those are private money lenders. Short-term loan, private money lenders, right? So that's the third bucket. We're not talking that at all. We're going to focus on the second bucket. So the overview for today: bank statement loan program, investment property loans, ITIN loan programs, other QM opportunities, and then we'll do a Q&A if there's anything left over, if you guys didn't ask me anything during, okay? We're going to start with the bank statement program. Okay. We all know, so let's define self-employed borrowers. Who are these people, right? Let's talk about that. Somebody who's not a typical wage earner. When you're a teacher, when you have a salary, you work in a company, you're an employee of a company, they give you something called a W-2, right? Those are the easiest for us lenders. We love W-2. We don't have to use our brains. We don't have to do too much calculation. A teacher's salary is written down in black and white. We just check their taxes for the W-2s for the last 2 years, pay stubs, and boom, we qualify them, right? Anyone who gets W-2s, it's a certain category. Now let's talk about somebody who gets 1099s. What is 1099? Somebody who's not employed by a company, is a contractor. They are self-employed, okay? You guys all get 1099s, yes? So you're self-employed too. No W-2s for realtors. So this mortgage that we're going to talk about is for all of you as well. Okay, it could be a owner operator, truckers, contractors, anybody who owns a business, S Corp, C Corp, K1s, name it, LLCs. All of these people fall in this category, right? So what is the rule here, guys? Self-employed borrowers have the advantage of reporting their income. If you get a 1099, you report it in your Schedule C of tax returns. That's what you all guys do, yes? Please say yes. I just want to know that you understand and you know you're with me, right? Okay, good.
Yes, yes.
Awesomeness. And then in the amount you get in your 1099, you put in as gross salary, gross income. But then you're going to deduct everything under the sun and more, right? And then you have something called adjusted gross income. We bank only look at the adjusted gross income, right? We don't look at the top, just the net. So what happens is most self-employed borrowers, they do report everything that they possibly can as expense, because you always pay taxes on the adjusted gross income, right? It totally makes sense. And that's the reason we always have trouble in like when we get the tax returns, you talk to them on the phone, they say, I make 150,000. Okay, great, send me your taxes. I just want to see what's on paper. And then it's significantly lower. Okay, so that's when we have trouble in qualifying them. Now, when I tell them, listen, if you want to buy this price, then you have to report so much. Then they go to their CPAs and then now they have to pay a lot in taxes and I don't like it. Some people, they say, okay, I'll do it. I have a great program, guys. It's for self-employed borrowers. It's a conventional regular agency loan where I only use 1 year taxes. So I work very, very closely with CPAs and accountants, and then we do the taxes right for 1 year. So for example, for 2021, if the taxes are done okay, I will not show the bank 2020. Just use 2021 and close the loan. Okay, that's another choice we do for self-employed borrowers. Business owners. So 44 million Americans, nearly 33% of the workers are self-employed. Okay, insurance agents, contractors, plumbers, property investors, developers, attorneys, doctors, physicians, they have their own businesses, right? All of these people, CPAs, and many more, many more are self-employed. Realtors. Okay. So now let's talk about the loan program for self-employed borrower. One way to calculate income is, so first of all, we're never going to show the tax returns when they're not sufficient because we don't want underwriting to see how low their income is. So the underwriter should never see those taxes. We're only going to show what we want to show. So there is a program where we just use either 12 months of bank statements or 24 months of bank statements, look at their deposits that they've made and their expenses. We determine their income based on their deposits. Okay. You guys don't need to worry how we're deriving, how we calculate those incomes. It's too much information for you, but you just want to know that I'm going to ask for 24. I usually ask for 24 months bank statement, and it can be personal and business. Both, any, all, give me all, because I want to max it out. Okay. Now, sometimes I take the 24 months and I tell them, listen, I'm only going to do 12-month bank statement because in 2020, your deposits were very low. 2020 was the peak of pandemic. A lot of people were collecting PPP loans. A lot was going on. So I will discard, will take out. I only want to show what looks good. I'm not going to show what doesn't look good. Okay? Because remember, once you show something to an underwriter, you can never take it away. She saw it. Those eyes saw it. That's damage. I don't want her to see anything that I don't want her to see. Okay? So borrower does not have to be owner. It's very flexible. It's super flexible. They don't have to be owner, 100% owners of the business, right? It could be an investment, primary, second home, single family, multifamily, non-warrantable condo. Recently, I closed a loan. It was, do you know what's a non-warrantable condo, everybody? Does everybody in this room right now know what's a non-warrantable condo?
No.
Let me tell you what it
No.
is. This
No.
is information you should know. Okay, you should know what's a warrantable condo and what is a non-warrantable condo. A warrantable condo is a condo building that will be financed by the government agencies. FHA, Fannie, it meets certain guidelines. I actually do a class on condo financing because condos is an area where a lot of deals die if you have not approved the building, because we need information from the building. We need to check the financial health of the building. So it meets all the criteria of an agency loan. That's called warrantable condo. A non-warrantable condo is there something is wrong with the building that Fannie doesn't like, such as there could be a red flag, such as there are too many renters versus owners. It could be there's a big litigation in the building. It could be there are too many delinquencies. Majority people are not paying their monthly condo fees. Okay. And it could be that one entity owns more than 10% of the units in the building. So there are many red flags. So when it's a non-warrantable condo, you can submit it for Fannie Mae. They're going to reject it. Now we come to this bucket. So this one, they don't care whether it's a non-warrantable condo. We are not selling this to Fannie Freddie. So those rules do not apply. That's the beauty of it. I recently closed a loan. It was a very good loan. The client made a lot of income. Her credit was fabulous. She was putting 20% down. She deserved a Fannie Mae interest rate, but she was declined by a bigger bank, and the attorney referred her to me. We went through this channel and closed because it was non-warrantable. There's no choice. Okay. So 30-year fixed or 40-year interest only terms and options. I want to point this out to you, how nice that 40-year interest only option is for certain people, not for all, but it's a good option to have. The payments are very low. And if you're an investor, and if you have a goal of buying it and keeping it for a few years or whatever your goal is, or if you really want, you're going to renovate the house, you want to have more cash flow, you don't want to pay too much, 40-year interest only reduces your payments so well. It's so nice. I did a closing recently. It was actually an investor in New York. He had an I-10. He has a construction company. Do you know what's an ITIN? Everyone in this room, do you know what's an ITIN? Good, good if you don't know, because you should all know this and you will know now, okay? Remember, it's ITIN, it stands for tax ID. So there is a huge, there are many, many people here that are not legal. They don't have a valid social security card. And they're just not, they don't have a green card or a work permit. They don't have that. They have something, the IRS issues them a tax ID number just so that they can file taxes and pay taxes to the government. That's the sole purpose of it. Hey, you're going to work here, you're going to make money in America, you better pay us taxes. And that's why that number is assigned to them. All tax IDs, write this down somewhere or just internalize it. All tax IDs start with the number 9. When somebody gives you their social and the first number is 9, it's a tax ID. They're not legal here. Just somehow internalize that. Fannie Mae, Freddie, the agencies do not fund to tax IDs, okay? So when you have a tax ID, you come to this section now. We do it. So coming to the closing idea, and the reason I share this with you is just so that you remember the story. Sometimes it's easy to remember a scenario, right? So this construction business self-employed client is an investor. He buys properties. He was buying a 2-family house as an investment, tax ID, no income, like does not report a lot in taxes, not sufficient at least. So we did 12-month bank statement, tax ID, investment 2-fam. We closed on him with 25% down, and he chose for the 40-year interest-only option, which was just great. It's 40-year fixed, 10-year, the first 10 years is interest only. But he can refinance it, right? So it turns out to be a pretty good option for some people. It's a good option to give if that works for them, okay?
Question, is the interest higher than opposed to the 30-year?
Yes, who's asking that? Esther, did you ask me this question?
Yes.
Thank you for asking that question. That's a brilliant question. Esther's asking, are the rates higher? What do you guys think? Are the rates going to be higher for these programs?
Yes.
Yes. Why? Because they don't qualify for a regular agency loan. Agencies give you the best deals. My goal is to get everybody an agency loan. But if they can't, then we're coming to this option. And let's talk about rates. Let's talk about rates for a quick second. You all now, what's going on with the rates? They're going up north, right? They've gone up north and they're continuing to go up, right? The Fed has already announced that they're going to increase the rates for more times, right? I think, Mary, you guys send very good newsletters. I get them too, and I like it, the way that you guys write. It's good information for us all. I love those newsletters. Very informational. So what happens is the rates for a normal loan, the rates are in the high 4s, 5s. Right now, agency loans. Let's take a perspective. Let's talk about rates going on right now. Now come to this bucket, second bucket, which is these broker loans. The rates are now in the 6s. Okay? They're in the 6s right now. And then you have hard money lenders and all, forget about them. They're like really high. I don't even enjoy that business, it's too high. They go double digits also, depending on your scenario, okay? So yes, the rates are higher. The rates are higher and the down payment requirement is higher because when you're not checking income, then they say, okay, we'll take the risk of giving you the money, but you got to come up with 15, 20% down. There's no mortgage insurance. Regardless of, even if we're doing 15% down, there's no MI, which is a big plus because MI can be expensive. Okay. Okay. Any questions on this? This can be done with 10% down, owner occupied. Okay, bank statements, 10% down, which is not bad. Anyone has any questions on this program? Okay, I'll give you my email and cell phone. If you email me your contact, I'll email you this PowerPoint, but also the 3 flyers that I have prepared for each of you, for you guys on the different programs. Those flyers are great because you can share it with the appropriate client. Okay. Investment property loans. So guys, do you know that the list pending list is just increasing? Yes, courts were closed, right, during the pandemic, and now courts are opened up. So our list pending list is increasing. And with time, there will be more and more investment opportunities. That's what we think is going to happen, right? There's going to be more inventory through the courts. There are a lot of people who are not going to be able to, are not paying their mortgages right now. They're not able to cope up. Let's talk about investment properties. Now, you guys, realtors, who gets the first shot at a good investment deal? Yes, realtors should be you should keep the best property for you, right? Because there's a lot of money to be made in real estate. Wealth is accumulated through real estate. I help a lot of clients buy their first home, second home. I'm now doing clients' children's mortgages. So I teach them how to get funded with agency money very easily with low down payments. How to take advantage of that, right? But so investment property loans, purchase up to 15% down, depending on property type. 2 families could be 20% as well, okay? But investment, not bad. You can buy any amount of properties. This is more like a sensible loan. Like if you have a credit score of 660, 650, it's okay, no problem. We don't need a very high FICO score because this is not agency loan. They will look at the sensibility of the project. Okay, we close all the LLC loans are closed in an LLC. You open up an LLC for that property, specific to that property, and you get financing under the LLC name. Now, please understand how the bank thinks when it is for investment property. When it comes to investment properties, the bank wants to see that the property is a good property. The income and expense of the property is good. The rents cover the expenses. We want to see the rental income. We want to see all the expenses. And then as long as the rents are on the upper side, it's called self-sufficiency. The property is self-sufficient, right? So they want to see that. And then of course you're putting a higher down payment and they'll give you the loan, okay? Okay, now when it comes to, I'm going to tell you, when it comes to investment properties, I have sometimes, in order to qualify the client, I have changed the program from 30-year fixed to 40-year interest only, because they didn't qualify in 30-year fixed, but 40-year interest only they qualify, right? Because sometimes maybe the rents are a little lower than the market rents. You know, there's a story going on in this, and then sometimes we have to work around that story, right? So that's really helps us a lot. Any questions on this? I'm going to keep this slide so you can have a quick look at it. Okay, good. I could tell you, I'm going to compare investment financing through Fannie and Freddie versus this. So Fannie and Freddie requires you to, no gifts are allowed for investors in a Fannie Freddie loan, number 1. Number 2, they need a lot of reserves. No gifts, so you have to have your own funds. But most importantly is you have to have a lot of income. 3 things for a Fannie Freddie agency loan. And when I cannot qualify them for a Fannie Freddie loan, I immediately switch it here. Okay, this is a great, great option for an investor. Now, let's talk about DSCR. Again, this is a good thing. I'll send you the flyers on this, okay? So don't worry about it. I'm going to send you, email you everything. But let me tell you what is a DSCR. This terminology and jargon is used in the commercial financing world. So you guys as realtors should know this. You should memorize this because it's good information. You should know this, okay? In the commercial world, they use the DSCR to determine whether they're going to fund on that particular property or not. It's called debt service coverage ratio. Basically, what is it? We're going to get the income and expense sheet from of the property. The income is all the rents, correct? Then we're going to get the expenses. What are the expenses? The taxes, the insurances, right? The water bill, the sewer bill, the this bill and the that bill. We're going to factor in like some kind of 3 to 5% vacancy, 3 to 5% for repairs or whatever. We're going to add that on. Then we have the expense. We want to make sure that the income services the debt by at least 1%. Usually banks want 1.2%, but I have lenders that are aggressive. They'll go from 0.75 to 1% as well. So as long as there's enough income to cover the debt, they'll fund the loan. Okay, without looking at your taxes. So realtors, if you're not reporting a lot of taxes and income, that's fine. We'll look at the property and qualify you with the property's self-sufficiency. Any questions on this? No? So now coming to, let me ask you all a question. What is a residential property? How do you define a residential property? One to 4 unit is considered a residential property, everyone. When the property is 5 unit and more, it falls under commercial. Okay? If the property if some properties are mixed use, what's a mixed use property? Literally like mixed use. If it's 2 apartments and 2 commercial spaces, it's called mixed use. The minute it has commercial and residential, it's called mixed use. It also falls under commercial. Okay? So now you can we can get financing on commercial properties with the DSCR, like I was mentioning before. In the commercial world, DSCR is used for qualification. When someone wants to buy a commercial property, commercial lenders don't really, they're not going to look at the income and taxes so seriously for the client. They're more concerned about the property itself. The way they think is, you put a good amount of money down, your property is self-sufficient, we'll fund you. Okay? Again, very easy. Like I was saying, no other income documents are required. The ratio is your income. We only need the Schedule E, which is the real estate owned section of the taxes, right? You can do multiple loans, couple of loans at the same time, no problem. Very, very flexible. Everyone here knows that ITIN is for tax ID clients. They're not legal here, right? Starts with the number 9. Okay. Let me tell you a little bit about tax ID clients because I work with them a lot. There are lots of them. And if you help one family, they'll refer so many more clients to you. if you help them out and go the extra mile for them, they really appreciate you, right? Because they're not legal. They appreciate if somebody kind of guided them a little bit, because they work very hard. They make good money. They work hard. They pay taxes. They do all of that stuff, and they save money. So I meet a lot of tax ID families when I tell them 20% down, they're like, sure, absolutely, right? It's their dream to buy a house. Okay. So FICO score 680, but no, if they have a 660, I can still work with them. I have many other programs. I have so many different products for ITIN that, you know, I can work with them. That's not a problem. Credit is not the issue. They can use bank statements as their income. If they don't report a lot of income, that's fine too. Ideally, 15 to 20%. I tell them 20% just to be sure. We can try 15, but ideally I like that 20% buffer because I don't want anything to go wrong. What if they just counter us with 20? 20 is a safe zone to be in, okay? And it's very flexible, like gifts are allowed. You know, they really, these programs are pretty flexible. Oh, what's not flexible is the rate. They're charging 1.5% over agency loans, right? You're paying a little bit higher. That's what it is. A little bit more down payment and a higher rate to compensate for the loss, you know, lack of income or lack of even your legal status. Okay. Again, we can do the same interest-only options, no problem. Investment loans for ITIN numbers, no problem. I do them all the time. Okay. Any questions on ITIN? Yes, Christina, you can unmute yourself.
Hi, Sheila. Thank you for your session. I'm interested in the tax ID clients. I just literally learned about this program last week. Few questions. What are the disadvantages for them? They're illegal, they're working, but they can get a loan. What are the disadvantages? One. Secondly, I do have someone who has the 20% down. It depends on what I'm going to get for him, but his savings is, say, 60,000 in the bank, but he's also saving at home. Should he be putting that money in the bank? Would you consider under the maintenance savings to qualify them?
Great questions, Christina. I'm going to repeat her questions for everyone, okay? She has a tax ID client. And her question is, what are the disadvantages of them since they're not legal in this country? Should they buy or not buy? To be very honest, Christina, I'm not a lawyer and I will not wear a legal hat. My job is to get financing and I'm doing that legally within the guidelines of laws. But if it's that, I would advise them to talk to their immigration lawyer about that question, because neither a realtor or a mortgage person should answer that question. Okay? Number one, you direct them back. All these tax ID numbers, they have an immigration lawyer that works with them.
Okay.
Right? And I think they should contact them. But I could tell you, like, I know tax ID people, they even buy investment properties. This is a melting pot. This is America. We have, you know, we welcome immigrants here. So, and we have programs, therefore, for these people. Number two is your question about assets. I'm going to take a moment here and talk about assets because this is something that every realtor should know and also help out guide clients. Okay. When it comes to, when I'm pre-approving a client, I don't care which bucket, which program, I am not going to sign a pre-approval letter till I've checked everything. I close all my loans. My reputation is good. I check everything before I give you guys a letter. Okay. If I give you a letter, you find them a house tonight, we're ready. That's what I mean by a pre-approval letter. And therefore, there are three things we're going to look at: income, assets, and credit. Assets. I do want to see money, right? I'm going to ask them for bank statements because you have no idea how many times I ask them on the phone, how much money do you have? 100,000. When I get the bank statement, 20,000. Then I question, Where is the 100,000? Oh, I have to sell a property in my country. Oh, my brother-in-law has it. It's in the locker. It's all kind of stories, right? No, this is a very crazy market we are in. We have to be 1,000% ready. So then I can coach them now. Guys, start putting the money in your account, right? We've got, if you're going to sell a property, I want to let the realtor know before they spend their weekends with this family. We all have to be a tight ship together, working together. So assets, Christina and everyone here, we have to tell our clients, guys, cash doesn't work. Okay, it doesn't work for the bank. We need to source where the money came from. You cannot source cash. I don't care what letter you write, it does not work. It's rejected. That's period. And therefore, put the money in. I show them how to put it in. Put in under 10,000 each time. If you have multiple accounts, put 85 in one, 95 in one. Pause a few days, then put a little different amount in one and the other. Don't be predictable. Just do it like that till you've deposited the money in the account. Or get a gift. A gift is a very easy, compliant way of putting assets in your account. That's never going to be questioned. A gift from a family member, they buy the money to your account, they do a gift letter, it's over. Okay. I've had clients who came to me with a contract. They called me because a realtor recommended, they are with the contract and they don't have the money. It's lying around somewhere. And now I have to, we're doing a gift now. There's no other way. There's no time to do any deposits, or it's just there's no time for that. Christina, did I answer your question?
Yes, thank you very much. Now, is there a limit to what we can purchase, or you're just going to look at the assets since you're not going to verify income? For instance, I have a client, the customer now is not going to show enough income because he did not file enough. How would you determine the limits that he can purchase?
That's a good question. So look, I have this program with a 12-month bank statement and 24-month. We look at the deposits that they made over this period and take an average of their deposits to determine their income. Okay. So now that Christina mentioned this, I'm going to take this moment to talk about another program I have, and it's True No Doc. No income verification at all. No bank statements. Because I have seen some bank statements where they just didn't deposit. They just purely operate on cash. Okay. And in that case, I have a 20% down, no income verification, but your credit better be good. Because now I'm taking bank statements away. So now they're relying on 20% down and good credit. What is good credit? Over 680. Are the rates higher? Much higher. Yes, they are. Now you're looking at some in the high 6s to low 7s. No doc. It's there. Christina, did I answer your question?
Absolutely. And how quickly can they refinance to get a lower interest rate?
So there's no prepayment penalty. They can refinance in most of them.
Okay, awesome. Thank you.
1 year. I always tell them, not before 1 year, please.
Okay, 1 year. Okay.
Okay. I mean, besides that, like I say that there are fix and flip loans. Those are short-term loans, right? You have an opportunity. Of course, the rates are a little bit higher because the bank understand that it's just a 12-month period. You need the financing. So they want to make some money on that 12 months, right? They're not going to give you the best deal on that. Those are fixed, but it's there. All these loans are there in case you need it. Foreign national loans. Okay, foreign national, you guys are from New York. New York knows there's a lot of foreign nationals, nothing unusual for you guys here. And asset depletion is for high net worth individuals. They have a lot of money. And so that's used to qualify them as well. Okay. Any questions? Good. I could tell you one thing, guys, that I would tell you one thing, that the whole goal when I meet someone is to see what is the best rate I could get for them? What is the best deal given their circumstance? So even for self-employed borrowers, I always tell them, listen, if you report for your 2021 income so much, I can get a Freddie Fannie loan with a lower rate. Real estate is one of the biggest investments of our lives, of their lives. So it's good to be able to give them choices and say, if you don't want to do that, then this is option 2, right? So the client is educated. They know they could do that or that. Now the ball's in their court. Now you determine what you want to do. Okay. Do you guys have any questions for me? Any other questions? Now, it doesn't have to be related
Can we
to
have your
this.
number?
Oh, sure. I'll put my information. Oh, that's too bad. My number is not even here. Okay, let me put it in the chat. Okay, I'll put it in the chat.
I actually have a question. In the
And yes,
beginning,
please ask me. And guys, don't just ask me about this program. You can ask me about FHAs, Fannie, Freddie. Those are my niches. I am extremely good with those loans. And I do a lot of them. You can Google me and check me out too.
okay, I have a question. In the beginning, you were talking about red flag. Maybe there's too many renters. Why is too many renters a red flag? Why wouldn't you give a mortgage if there are too many renters?
You know what? That's a very good question. So Esther is talking about condominium finance, condo financing, where I said that the bank's going to check the financial health of the building. One of the things that they want is majority homeowners live in that, occupy that building and the apartment they own. And if they don't, it's considered a red flag. Fannie Mae doesn't want to lend to them. And the reason being is, so Esther, let's say you own a condo, right?
Mhm.
So let's say you live in that condo today with your family. If
Right.
you have a financial adversity, which one are you going to take care more of, the house that you live in or your investment?
I
You
guess the one I
always
live in.
will take care of the property, which is your primary residence, what you occupy. If you have any adversity, that's the one you will protect first, right? So the risk is considered more, and homeowners are going to take care of the involvement that they have with the association, with the upkeep of it is more, as opposed to investors. So the risk is, if they are majority rent owners, they don't care too much about this, as opposed to somebody where there are homeowners. You will see a homeowner building, which is majority homeowners, is very well kept. They're better management, just because owners are occupying it. Okay.
Makes sense.
Yeah. So, condos, like I mentioned to you, condos is one area where deals die like really first. So I would say that before you help anyone with a condo, please make sure that they understand what it takes, how it works. What I do typically is I do a Zoom call with the realtor and the family, and I educate them about condo financing. If they're an FHA approved buyer, then there is a link, FHA link. You put in the zip code and it tells you which buildings are approved for FHA financing, for VAs, for Fannie. So all of these things, because what is the most important thing is your time. You don't want to waste time showing them something that they're not going to get funding on. It's so demotivating. So we need to be very connected with our buyers. So I share that link with the realtor, with the buyer. Hey, look, this is what it is. Okay.
So Sheeta, condos will be affected as well. The condos that have it's a condo, you have the co-ops and condos combined.
Co-ops is a very different financing, completely different. It's not real estate. And therefore, it's a special program for co-ops. Please do not confuse one from the other, Christina. Co-ops is different. Co-ops, what happens is there's a list of...
That's not the question. You have these buildings that are called condos. They have, I believe they have condos and co-ops combined. And or some of them are co-ops, condos and rentals. I was just asking if that falls under the same category with condos.
I don't know what you're talking about, co-ops and condos combined. There is no such thing that I'm aware of. Either it's a condo building or it's a co-op building. If it's a condo building, that's what I spoke about. If it's co-op, then we need to check. There is a list of co-op buildings that are already approved. Then I would like to check if it's a totally different topic. Okay. Anyone else has any question? How are you guys doing with bidding wars? How let me know if there's any, I do a lot of, I like getting my offers accepted. I like to go into in a mode where I'll do anything to get them accepted, especially because I know my stuff. I can do what I can do. So if ever you guys have any question, you know what? I don't know where to put my information. I don't know, for some reason, I'm not even seeing the chat on my screen. I don't know what happened. It disappeared. Mary?
No, the chat is there. What I was going to suggest is when I send this around, the recording around to everyone, I can attach your information to that. For further information, please contact. We'll put your email and your phone number.
Oh, okay. I don't know what happened though. I really want to.
You can put
I
it
found
in the
it.
chat
I found
now.
the chat.
If you want to put it in the chat now so people can copy it now.
Yes. I got it actually. So I got it and I'm going to do it right now.
Okay.
Mary, will you still send the information over because I'm driving, so I can't really. Okay. All right, great.
Yeah, I'll send it probably this afternoon. We have to convert it into a YouTube file. And then once that's done, we will send it out.
Thank you.
Okay, I am sending you guys my information in chat. And the best way, everyone, is to text me. If you need to reach out, email or text is so much better. I will put it down here now. And my cell phone is coming up.
Okay, yeah, I see it now. If everybody wants to copy that information down. And Sheetal, what areas do you service? All over, right?
So I'm licensed in New York, New Jersey, Pennsylvania, Connecticut, Florida, and Georgia.
Okay.
Yeah.
So you can help someone. I mean, our association geography is from Manhattan all the way up through Orange and Rockland County, Putnam. So no matter where anybody is, you can help them.
100%. Absolutely.
Okay. Great.
Yeah. I mean, and now, you know what, with Zoom, Mary, things changed in the last 2.5 years.
Sure.
So a lot of clients, even if they're very close to my office, they just say, hey, can we just set up a Zoom call?
Mm-hmm.
And I share screens and I go over the application. I go over the loan estimates with them. We do a dedicated Zoom call. We see each other and people like that convenience. So it really doesn't matter where you are.
Okay.
It's all about numbers and options and education,
Okay.
Yeah, that's a good question though.
All right. Well, if nobody has any more questions, Sheetal, I want to thank you. It was really, really informative. I think everybody got. Oh, Elizabeth, you have a question? You can unmute and ask. You can unmute if you want to ask a question.
No, I was saying thank you. I was just saying
okay.
it was
Okay.
very
I have a
helpful.
question. I'm looking at your contact information and you said that we could text. Is that D, your cell phone
No,
number?
D is my direct office line, but then I sent you this number 201-951-6423. I'm resending it now again.
Okay,
Look at the
Yeah.
last text.
all right.
Oh,
'Cause
I see it in the cell. It just says cell
Yes.
number. Yes.
Yes, it's below the message, the first
Yes.
one.
You know, guys,
Okay.
I always keep realtors updated with what's going on in the mortgage world. If you guys email me your contact, I can do that with you. I like to update because right now it's such a volatile time where I think realtors should know about mortgages, at least a little bit, so you can guide your clients. And it's good to know, you know, it's good. People like to work with people who have a little bit more knowledge than their competitors. No, it's good to know. Okay.
Well, that's the
But
most important
again,
thing.
If you have any deal that's difficult or you feel is not getting approved, call me. Call me because I'm known for that. I'm very aggressive. We have no overlays in my company. We are direct lenders for Fannie, Freddie, and Ginnie. So we're pretty good. We work hard in my team. We all are very hardworking people.
Okay.
Okay, thank
All right,
you.
great.
Good night.
Well, I want to thank everyone for attending.
Thank you for
And,
attending, everyone. I'm so happy
yes.
to see
Thank
And
you.
tomorrow's,
Thank
if
you.
you want to join us tomorrow, we're having another breakfast with benefits tomorrow with Robeson, and it's really going to be interesting. It's about working with first-time home buyers to see, you know, to help them gauge like their utility costs. Because a lot of times maybe they're coming from an apartment and they don't have any idea about how much, you know, electricity is going to cost or oil or you know, gas, and it's kind of like an educational program to kind of help them with that. So that's going to be tomorrow at 9:30, and you'll get an email about that. But thank you all very much
Mary-
for attending.
Mary,
And yes,
it's
Hi,
Felicia
Felicia.
Cedar.
How are
Hi,
you?
good. How are you? I just want to say quickly that I do a lot of business in the non-QM world, being in the on the appraisal side, and I can tell you nationally, locally, Florida, New York, Connecticut, all over the place that we are. This is one of the most informative non-QM discussions I have ever heard.
Wow. Great.
Outstanding. And I can tell you that I know most of all your competitors and they're on my rotation. And this was one of the best I can say on a real estate perspective for a realtor. Very, very informative. Take this information, listen to it again. Powerful,
great.
powerful.
Thank
Yes.
you,
Felicia,
Felicia.
I agree.
Felicia, I must add, Felicia,
I
I was
agree.
almost not going to take the class because I said I've had this over and over.
No,
Due to what Felicia said, I'm grateful I tuned in. Thank you.
I'm telling you, you're welcome. I'm telling you, I've been on the real estate side and I'm a appraiser from Florida, but a native New Yorker. And I sit through her competitors' meetings when I have monthly meetings. And I can tell you, this woman is on the spot.
All
I
right,
agree.
good.
Thank you.
Thank you.
Very
My
good.
God, you guys are awesome. Thank you. You just made my day. Felicia, I appreciate your comments. Thank you so
No
much.
problem. You're
Excellent
welcome.
presentation, Chantel.
Very,
Thank you.
very
Thank
informative.
you.
Thank you so much.
All right,
Good.
everyone.
I hope to see you guys live one day, and please attend
Yes,
the CE
yes.
class that I will host
real
because I really
breakfast.
enjoy it.
Yes.
I'm
real
going to
big.
call you,
Bye.
Chantel.
All right.
Thank you,
Bye,
Alice.
everyone.
Have a
Thank you.
great day, everyone. Thank you so
Bye-bye.
much. Bye-bye.
Bye.
She's on the morning.